Life Insurance has filed red herring prospectus for initial public offer. Remember, this come after the merger of between Standard Life and HDFC Limited. Mumbai-based HDFC Life Insurance IPO would be open for subscription on 7th November 2017 and it will be closed on 9th November 2017. This is the third largest life insurance company in India. Its revenue grew at 22% CAGR in 5 years and its profit grew at 19% CAGR in last 5 years. It's earned 3.8% margin in financial year 2017. It is asking for the price band of 275 to 290. Face value 10 rupee per share, book value 19 rupee. Issue size approximately at 8700 crore on upper price band. Lot size minimum 50 shares. The main objective of this IPO is to get the benefit of listing of equity shares on stocks exchanges. This is fully offer for sale, so this money will not utilize in business activity. This is the most profitable business company based on the value of new business margin according to CRISIL report. This is also on top among 3 companies based on the market share in 2017. Now let's see a schedule of this IPO. On 7th November, issue will be open. On 9th November, it will be closed. On 14th November, you will get allotment of shares. On 15th November, you unblocking of fund from ASBA. 16th November, shares will be credited to your demat account. And on 17th November, it will be listed on both the exchanges, NSE and BSE. Now let's see financial comparison with this peer. We will see major ratio for the comparison and we will compare with its major peer ICICI Prudential and SBI Life Insurance. Let's see PE ratio. ICICI Prudential has P of 40 rupee, SBI Life Insurance is P of 66 rupee and HDFC Standard Life has P of 65 rupee. So ICICI Prudential has lowest P in industry 40 rupee and SBI Life has a highest P of 66 rupee and industry PE life insurance is 51 rupee and HDFC Life is asking for 65 rupee. So I think this is the nearest to expensive company SBI Life. So I think this is expensive price band. Let's see price to book ratio. ICICI Prudential price to book ratio is 9 rupee, SBI Life has 12 rupee and HDFC Standard Life is 15 rupee. So I think this is somewhat overpriced based on book value compared to its peer company. Let's see return on equity. ICICI Prudential has return on equity 31 rupee, SBI Life Insurance has 20 rupee and HDFC Standard is 29 rupee. So I think return on equity is reasonably good of this company. Let's solvency ratio. ICICI Prudential has solvency ratio of 281%, SBI Life Insurance is 204% and HDFC Standard Life is 192%. So its peers are more stronger based on solvency ratio. Let's see claim settlement ratio. ICICI Prudential has 97% claim settlement ratio, SBI Life Insurance 98% claim ratio and HDFC Standard Life is 99% claim ratio. So I think this is the stronger compared to its peer company based on the claim settlement ratio. Now let's see market share of this company. ICICI Prudential market share of 15.50%, SBI Life Insurance 20% and HDFC Standard Life has 17% market share. Dividend payout ratio. ICICI Prudential has 40% dividend payout ratio, SBI Life Insurance is 19% and HDFC Standard is 30% dividend payout ratio. So I think overall company has a good return on equity but somewhat P is expensive, I think so. Now let's see investment strategy. On upper price band of 290, EPS is 4.5, P is work out to 65. If we compare with its listed peer ICICI Prudential and SBI Life, ICICI Prudential lowest P of 40 and SBI Life is highest in industry of 66 rupee and HDFC Standard Life has 65. So I think company is asking for high price band. Of course, the company has a good financial reports, good financial condition, but it is asking for high price band. I think so. I think we should invest in IPO only if we get minimum 15% return. In this, at currently gray market premium is 18 rupees, so I am expect 6 to 8% return in this IPO. If you are ready to take 5% downside risk and you are satisfied 6 to 8% return, you should invest this IPO. I am neutral in this IPO. Risk taker investor can invest in this IPO, and risk averse investor should avail from this IPO. So I think we should invest only if we get minimum 15% return. But 6 to 8% return is I am expecting from this IPO. I think price band is somewhat expensive. Let's have a special chat with the chairman of this company, Deepak Parekh. So how your organization work on pricing?
Business insurance policies are taken for 15, 20, 25 years. Right. So investors also have to be patient for medium to long term to make money. You can't make money overnight, so you must have the patience. Regarding pricing, we think our pricing has been reasonable. Seeing what the market has reacted to in the earlier insurance companies, we have taken that into account and adjusted our pricing. We think our pricing has been fair. Our numbers are much, much better than some of our competitors. Whether you look at return on equity, whether you get new business premium percentage, new premium margin, persistency, all these numbers are much better than our